Hey everyone, welcome back to Mr. Rich Channel. In this video, I'm going to show you how I started trading with just $268 and turned it into massive profits using my highly accurate compounding strategy. This method doesn't rely on complex or cluttered indicators, just moving averages and MACD, but the results are insanely powerful. I'll take you through every entry point, real-time analysis, and explain my decisions step by step. No cuts, no filters, full transparency. So if you've been struggling to find a solid strategy or keep losing trades due to unclear signals, you need to watch this video until the end. Make sure to hit the like button, subscribe, and turn on the notification bell, because I'll keep sharing my proven strategies and live profits, only for serious traders. Let's begin. Okay, I decided to take a buy position at this moment because the price successfully broke through the red line, the main trend line that previously acted as resistance. After this breakout, the trend started to show strong upward movement. This is confirmed by the appearance of several large green candles in a row, indicating significant buying pressure in the market. In addition, we can see a rejection candle, which signals that the market rejected lower prices. Another indication that buyers are currently in control. Looking at the indicators, both the moving average and MACD lines are showing a sharp upward movement. This strong momentum gives me more confidence to enter a buy position. Let's see the result. All right, it's a profit. Now, let's open the market again and analyze the next opportunity. I decided to take a sell position based on multiple strong technical confirmations. First, we can see that the recent candles have broken below the red trend line, which previously acted as a dynamic support area. This break indicates a shift in market sentiment. And what's more important is that after the breakout, the price failed to climb back above the trend line. That failure is often a powerful signal that buyers are losing momentum and sellers are starting to take control. Next, there are no signs of bullish recovery. Instead, we're seeing consistent bearish candles, showing steady downward pressure. This tells me that the market isn't just reacting, it's continuing the bearish move with confidence. From an indicator perspective, both the moving average and the MACD are clearly pointing down. Now let's check the result. All right, profit. The market respected our setup perfectly. Let's reopen the charts, stay disciplined, and wait for the next high probability opportunity. I decided to take a buy position based on a strong technical signal, particularly from the MACD indicator. If we take a closer look, there's a clear crossover between the MACD line and the signal line, commonly known as a MACD crossover, which often signals a potential trend reversal. This crossover indicates that the market momentum is shifting from bearish to bullish. Supporting this, the MACD histogram is starting to move into positive territory, suggesting that buying pressure is building up. From a price action standpoint, we can also observe several bullish candles forming with solid bodies, a sign that buyers are gradually gaining control. The combination of MACD crossover, rising histogram, and bullish candle structure gives me enough confirmation to confidently enter a buy position. Let's check the result. All right, profit. The market moved exactly in line with our analysis. Now, let's reopen the charts and look for the next opportunity. I decided to take a sell position based on a combination of clear technical signals. Looking at the past few candles, we can see that the price broke above the red line, which previously acted as a resistance level. However, that breakout didn't hold. Instead of continuing upward, the price reversed. This is confirmed by a candle that closed back below the red line, rather than maintaining its position above it. That's a strong sign of a failed breakout, showing that buyers lost momentum and sellers are regaining control. In addition, the MESED indicator has formed a bearish crossover, further confirming a potential downward move. The histogram is also starting to print in the negative zone, indicating growing selling pressure. So with the failed breakout, the candle closed below the red line, and the MESED bearish crossover, I felt confident entering a sell position. Now let's see how it plays out. All right, profit. The market followed our analysis perfectly. Let's reopen the charts and prepare for the next setup. You might be wondering, why did I sell here? Why not go for a buy, especially since the trend is still going up? That's a great question. And the answer is simple. I follow what the market shows, not just the overall trend direction. I decided to sell at this point because there was a highly significant red candle that closed below the red line, which previously acted as an ascending support. That's a strong signal of trend weakening or a possible short-term reversal. Not only that, the red candle was about 3 times larger than the previous candle. This isn't just any candle. It's a sign of strong selling pressure, potentially marking the beginning of a correction. From the indicator side, the MESED histogram is shrinking, not expanding, and that's a key detail. A shrinking red histogram often means bearish momentum is about to build, not fade. So while the larger trend may still be bullish, I sold here because the signs of weakening and reversal were too strong to ignore. All right, profit. The market respected the setup. Time to reopen the chart and prepare for the next opportunity. I decided to take a sell position at this point, even though some indicators, like the moving average and MESED, are showing bullish crossovers. Technically, that would be a signal to buy, but remember, indicators are just tools, and in this case, I'm placing greater importance on price action and the red line level. If we look closely, the last candle touched the red line, a key resistance, and was immediately rejected. This shows that the red line is still holding strong as resistance, and any bullish signal from the indicators becomes less reliable in this context. My decision is based on structure. As long as the red line hasn't been broken with a strong confirmation, I still see it as a sell zone. So while the indicators may look bullish, I stick with what the structure tells me. Let's check the result. All right, profit. Market respected the resistance. Let's reopen the chart and look for the next clean setup. I decided to take a buy position at this moment because the price is currently sitting at a key support level, which in this case is the red line. In technical analysis, support is an area where price tends to bounce or react. Historically, it's where buyers usually step back in. The most recent candle clearly touched the red line but failed to break below it. Instead, we saw a strong rejection candle. That's often an early sign of buying pressure starting to build. I'm not just looking at the support line itself, but how price behaves around it. Support doesn't always cause an immediate spike upward, but when selling pressure weakens and buyers start to respond, that's where I pay close attention. So I entered this buy based on structure and supportive price action around a known support level. Let's check the result. All right, profit. The price bounced from support just as expected. Now let's go back to the charts and prepare for the next opportunity. I decided to take a sell position again, and the reason remains consistent with my previous analysis. We can see that the recent candles attempted to break through the red line, which currently acts as a resistance level, but they failed to push higher. Every time the price approached this area, it got rejected, and no candle was able to close above the red line with strength. That tells me the market still respects this zone as a strong barrier for further upward movement. The repeated failure to break resistance is a clear sign of buyer weakness, and often signals that sellers are ready to step back in, especially when those rejections are followed by strong-bodied bearish candles. It's a high probability setup. So even though there was some upward momentum earlier, the market structure hasn't changed. Resistance is holding, and that's enough reason for me to confidently enter a sell. Let's see how it plays out. All right, profit. The market responded exactly as expected. Now, let's go back to the chart and prepare for the next opportunity. I decided to enter a sell position based on a strong technical signal, a moving average crossover. Specifically, the faster MA has crossed below the slower MA, which is a classic indication of a trend reversal from bullish to bearish. This crossover often marks the beginning of downward momentum, and when spotted early, it gives a great opportunity to catch the start of a new trend. More importantly, at the moment of the crossover, price showed no signs of strength to push higher. There were no significant bullish candles. Instead, selling pressure slowly began to take over. I always look beyond the indicator itself and focus on the price context. When an MA crossover happens near a resistance zone or during a weakening trend, it becomes even more valid as a bearish setup. So I entered this sell based on the MA crossover, supported by price action and market structure. All right, profit. The market followed the signal perfectly. Time to reopen the charts and look for the next clean opportunity. I decided to take a buy position because there are clear signs that the market is going through a trend reversal. Initially, the trend appeared bearish, but that started to shift. The most recent candle closed above the green line, which had previously acted as resistance. That's a key signal that price is gaining strength and buyers are starting to take control. Even more importantly, after that candle formed, price failed to drop back below the green line, suggesting that a new support level has formed. On the indicator side, we saw a bullish crossover on the MACD, where the MACD line crossed above the signal line, a classic sign of upward momentum. Additionally, the MACD histogram started turning green and expanding, confirming growing bullish pressure. This combination of a strong candle close above a key level, price holding above support, and MACD confirmation gave me confidence to enter a buy position. All right, profit. The market followed the plan perfectly. Let's move on to the next setup with patience and discipline. And that's the result of today's trading session. With the right strategy and disciplined execution, my current balance has reached $154,554. This isn't about how big the number is. It's about how we manage emotions, read the market, and execute with clarity and purpose. Trading is not luck, it's process, experience, and consistency. Thanks for watching. If you enjoy content like this, don't forget to like, comment, and subscribe, and hit the bell icon so you won't miss the next video. I'll see you in the next one. And as always, stay disciplined in your trading. This is Mr. Rich, signing off.